So, you're thinking about investing in a Muskoka short-term rental. You already know it's probably one of the most competitive cottage markets in all of Canada. Today, we're going to cut through all that noise with a pure, data-driven breakdown of the 6 major townships to figure out where the real opportunities are hiding for 2025. So with regulations completely shifting and demand changing, the big question is, where does the smart money actually go? It's not as simple as just picking the prettiest lake anymore, right? The real answer is kind of buried in the numbers, so let's dive in. Let's just start with a number that should get your attention. Nearly $78,000. That's the potential annual revenue for a typical property in the region's top-performing township. But, and this is a big but, as you're about to see, the highest revenue, well, it doesn't always tell the whole story. Okay, first things first, let's get the lay of the land. We're going to start with a bird's eye view of the core numbers across all 6 key submarkets to see how they really, truly stack up against each other. Now, what's really interesting here is the story this table starts to tell. At a glance, Muskoka Lakes looks like the runaway winner on revenue, and that's driven by a, frankly, staggering $818 average daily rate. But then, your eye kind of drifts over to Huntsville. It's got the lowest revenue potential of the bunch, but look at that, the highest occupancy at 52%. This is our first major clue that there are very, very different ways to win in this market. And this chart just throws that contrast into sharp relief. You have Muskoka Lakes and Georgian Bay way up top, commanding these absolutely premium prices. And then there's Huntsville, all the way on the other end of the scale. That gap is huge, and it perfectly sets up the 2 main investment strategies that we see dominating the entire region. So here are those 2 paths laid bare. In Muskoka Lakes, you are playing the luxury game. You're aiming for fewer bookings, but from a high-end clientele that's willing to pay top dollar. Over in Huntsville, it's a volume game. You offer a much more accessible price point, and your #1 goal is just to keep that calendar full. Both are profitable for sure, but they require completely different properties and, honestly, completely different management styles. Okay, so you've got these 2 very different strategies. But what kind of property do you actually need to pull them off? That's what we're digging into next, the specific features that directly pump up your bottom line. You know, let's be blunt, the data is crystal clear on this one. In Muskoka, size matters. The properties with 5 to 7 bedrooms, the ones built for big families or maybe multiple groups, those are the ones generating the highest revenue. Your smaller 1 or 2 bedroom units, they really struggle to compete unless they have an absolutely prime in-town location. Beyond just the bedroom count, it is all about the amenities. Waterfront access and a private dock, yeah, those are pretty much table stakes for a top-tier property. Things like hot tubs and saunas have moved from nice to have to you better have one. But the real tell for 2025, the new kid on the block, is the EV charger. That's a huge signal of where that luxury consumer is headed. And don't think of these as just expenses. The crucial point here is that adding one of these key amenities, like that hot tub or an EV charger, can directly boost your average daily rate by a very tangible 8 to 12%. I mean, that is a massive return on a relatively small investment. All right, let's shift gears to what might be the single most important and most overlooked factor for 2025, the regulations. Because this complex patchwork of rules isn't just a headache. For a really smart investor, it is a massive competitive advantage. And I want to be really, really clear about this. You can have the most beautiful property with every single amenity we just listed. But if you get the regulations wrong, your investment is dead in the water, period. Understanding this landscape isn't just important, it is everything. So think of this slide as your regulatory cheat sheet for all of Muskoka. And wow, the differences are stark. You've got Huntsville with its brutal 1-year ownership rule and a hard cap on units. Then you have Bracebridge with its hefty annual fee. And then there's Muskoka Lakes, which is in this really interesting grace year before new rules land. The takeaway? You can't just have one strategy. You have to pick your market and its specific set of rules. And to make this even clearer, let's just boil it down to the 2 extremes. On one side, you have Huntsville. It's basically a regulatory fortress. That 1-year ownership rule is designed specifically to keep new investors out. Then on the complete other side of the spectrum, you've got Georgian Bay. Its simple registration model is less of a wall and more of a welcome mat. Okay, so we've covered the market numbers, the key property features, and the all-important regulations. Now for the payoff. Let's pull all of this together into a clear, actionable playbook for 2025. Based on everything we've seen, here are the top 3 plays on the board right now. Play number 1, Muskoka Lakes. Go for the high-end luxury play and absolutely exploit this 2025 grace year before the new rules change. Play number 2, Gravenhurst. This is the sweet spot. You've got strong revenue that meets clear, scalable rules. It's built for professional operators. And play number 3, Georgian Bay. This is your clearest path for entry with some really strong growth potential. But what about the other townships? Well, they require a much more surgical approach. In Huntsville, don't even think about starting from scratch. With that ownership rule and the cap, an existing licensed property isn't just an asset, it is a scarce gold mine. And for Bracebridge, that high annual fee is really a filter. It only makes sense if you're targeting large, high-revenue homes, where that fee is just a drop in the bucket. And this brings us to the most crucial takeaway of this whole breakdown. All these regulations, they are not a threat to a serious investor. They're a gift. They are weeding out all the casual operators, which tightens the supply, drives up the rates, and allows professional, well-run properties to absolutely dominate the market. So the question to leave you with isn't what's the best township, it's which of these strategies is the best fit for you. Are you equipped for the high-end luxury play, the balanced professional operation, or the smart, low-barrier entry? The data gives you the map. The destination, well, that's up to you.